Welcome back to another episode of Ethereum Chill. I am Trader Mayne. Hopefully everyone's been making some money. We've had some crazy pumps going on across the board. Bitcoin's been bullish, Ethereum's been bullish, all coins have been going absolutely mental. Let's get right into it. So in Bitcoin here, where are we trading? Last week's video, we came up into this kind of resistance area, and I expected us to find exactly that. Some potential resistance here that might cause a bit of a pullback. So last week's video effectively was trading right here. And as you can see, we saw a little bit of a pullback, still within this kind of bullish range though. And then what happened? We got a pop to the upside, and now we're pushing towards the top of this range. What I can kind of show you guys here is a trade setup that formed here, but effectively we had this 12-hour range marked out in the last video. And how do we trade ranges? If you've been watching any of my videos, especially my videos from May, we talk about wanting to look for trades within the range in a very specific way. So if we're trading in a bullish range, which is defined by a low and a high, right? So there's your range low, there's your range high. I'm not looking to long up here. Where I want to long is either on a flip of the range high or a deeper retracement into the sweet spot or the lower 1/3 of the range, right? So if this is your midpoint, I want to be longing down here. And generally what you will get is you will get these deep retracements that oftentimes will retrace into the point of origin of the move. And that happens to be oftentimes a bullish order block of sorts. And then that is where you want to look for your long, which is going to be the higher low, which is going to lead continuation and a move outside of the range. And that's exactly what we saw happen here. So as you can see here, we have this little 12-hour range that's defined by this swing low and this swing high, right into resistance. So with the combination of us forming a range and coming into resistance, a retrace is expected. And if you go and look at Twitter, right here, I tweeted, I said it either has to pop here or we come down here. And basically what this little box here is just a little fair value gap right in the chart here. It also would have been a little retest of this breaker. So this was kind of the next area of support should this range fail to continue to move to the upside. However, the range did not fail. We came down here, I tweeted out needs to pop now, and then boom, we got a nice big pop. So what was the trade setup here? How do you get involved? Well, if you zoom in here, we have our range. And where did we pull back to? Just like that diagram I drew up a few seconds ago, right? This is the order block right here. This is the point of origin of the range right there. So you had the range low, the range high, deep retrace, return to the origin, return to the point of the breakout, give you a bullish setup here, and then pop. What else would be in line with this order block here? So you have the order block, right? Well, this is a range I've identified with these two levels, but what is a range? What do you think will happen if I line up the fib with the range low and the range high? So if I put the fib at the range low and then again at the range high, voila, right into the lower 1/3 of the range and then pop. So you could have taken this trade based on the 12-hour chart itself. So the way that the 12-hour chart would have set up is you likely would have longed at the open of the order block. Your stop would go below the order block and your target would be the range high. So that's almost a 4R trade, and this is all within a range. This isn't even counting on expansion, right? So a 4R trade almost based on a very basic 12-hour entry, very easily definable stop, because if you're wrong here, we likely trade much lower. So your risk is well defined. And this is just a trade back into the range. So what does that mean? You take some off here, trail your stops, right? Bring your stops up to break even, maybe even bring your stops up to here, right? Which is the last SR level, put them below here or below the 382. And then you can actually compound when you see this form. SFP, SR flip at the range high, you could add back what you took off, or once this candle closes, you move your stop up to there and you just trail it. And now you've got a runner for potentially much higher prices, right? Very clean setup here on the H12. And again, what can we do? If we're interested in getting a tighter risk reward, what do we do? Step one is identifying your key levels, right? This is always the same process for us. Step one is identifying those key levels. Where are trade setups going to form? And in this instance, we have 2 key levels marked. We have our point of breakdown of this dump, and we have a range. So our range is defining our key areas of interest, right? Our key levels are there. Next key level that we identify is the H12 order block. Boom. We have our fib confluence. And then on top of all of that, we can dial in to a lower time frame to get a tighter risk reward. And the way that you do that, remember, is always top-down analysis. So we start on the high time frame. That's the H12. We could enter based on the H12, but if you're entering on the H12, your stop is going to be based on the H12. Your target is going to be based on the H12, which generally means it's going to be looser. That might mean you might have to have smaller position size. All of these things, it's going to take longer to play out. All of these things come into consideration. However, if we have the framework based on the H12. So if the H12 is bullish here, for all the reasons I just mentioned, I'm going to quickly summarize them for you. H12 is bullish here. Reason number 1, we have key levels here and here. Reason number 2, H12 bullish order block. Reason number 3, a deep retracement within a bullish range. So we have multiple pieces of, and the fib. If you want the fib, you can pull the fib on there. But we have multiple pieces of confluence telling us that I want to be looking for longs down here because the risk reward is as good as it's going to get because you're wrong right here. Once you have all of that confluence added up, the high time frame order flow is bullish. We're bullish on the H12. So what can we do? We can zoom in and look for a setup on the lower time frame that will give us a more favorable risk reward setup because we can use a low time frame entry technique and a low time frame invalidation. The 12-hour entry technique was buying the order block, stop at the low of the order block, and a target of here. That gave you a 3.5, 3.6 R. That's pretty fucking good for the H12. However, if we want to get tighter, if we want to get in on a lower time frame, what do? We zoom in and then we look for a setup that is in line with the high time frame order flow. So if the high time frame order flow is bullish, I'm not looking for this breakdown as a reason to sell because in an H12 uptrend, there's going to be a downtrend on the hourly, right? So I'm not looking to sell on the hourly. I'm waiting for the hourly to sync back up with the H12 because the high time frame takes precedence and that order flow, right, will mean that the trades you take on the lower time frame, if they're in line with that high time frame market structure and order flow, are going to be higher probability trades. If the H12 is doing a big bullish move, taking shorts on the H1 is counter trend, right? And you can see that here because when the long plays out, that's the move you want to be in. We just made a higher high now on the H12. We're back in time, back in line with the high time frame order flow. And that market structure is going to shift on the low time frame first. And so that's what we're looking for in our entry here. So when we go down to the H1 or whatever low time frame you want, when we get to this green box, I'm making it green because green means bull. I'm looking for reasons to get long here. I'm not looking for reasons to get short, right? So if you can find a setup here that works for you, maybe it's this, right? Maybe it's the reclaim of this, breakdown, reclaim, higher low. Maybe that's your setup, right? Maybe you're looking over here and you're saying, okay, well, there's actually an H1 order block right here. Within the H12 order block, there's an H1 order block, and look at how much better your entry is. Your H12 entry is here. Your H1 entry is here. Your H12 stop is here. Your H1 stop is here. Target still remains the range high. So if you take out your risk reward tool, right, here's the H1 setup. That's a 10R relative to the 12-hour setup, which is still a good trade, right? But clearly not as good as the low time frame trade. And I mean not as good in terms of just less risk reward. It doesn't mean one trade, you can't take the H12 trade. Maybe that's what you're comfortable with. Maybe you don't want to enter on the H1. Maybe you don't see a clear setup on the H1. But if you can start talking about market structure from a high time frame to low time frame kind of thought process, right? Whittling your way down. Start at the high time frame, find the key levels, determine what your bias is, and then when you zoom into that low time frame, whatever it may be, your probability, your expectancy of getting trades right and catching the swings is going to be greatly increased, because you will have the high time frame order flow backing your low time frame ideas. And this is a super fucking key concept, and I don't expect you to get it on a first try. You need to watch this video more than once. You need to go in the charts and you need to get those reps in, right? And you will start seeing this shit work. And this is super key for anyone who is a scalper. If you're a scalper and you're trading on the M1 and you're like, oh, I'm trying to long the M1 and I keep getting destroyed. Well, what happens if the M15 is bearish, right? So this is the M15 trend. You're longing the M1 and getting ripped because you're counter trend. What you should be doing is, if this is bearish, you should be looking for shorts on the M1, because this would be your high time frame. So what is the order flow here? Okay, that is what you want to be looking for on the M1. This would be the H1 setup that jumps out to me, is this H1 order block here, right? That's basically a perfect trade there on the H1. But there's a few here, right? This is a breaker. So it doesn't give you a perfect retest, but as soon as we close through here, you can long this. You could long that candle close with your stop there. You could also wait for a level to get reclaimed. You could wait for this level to flip. See this? Once it closes through there, like, you need to be looking for reasons to get long, not looking for reasons to short. Again, you can go lower. We could go to the M15, and there's an M15 order block right here that gives you an entry. And the reason that this tiny little candle ends up working is because it's within the context of the high time frame. This is H12. H12 order flow is bullish. We're looking for reasons to get long. So then the M15 is going to give us that reaction. This is the candle that started this rally, and it's within the H12 candle that started the rally, right? And so when we zoom forward in time, look at the entry that it gives you. Right? There's also multiple bullet. We need to be a bull, right? We're a bull within the green block. There's a swing failure pattern. This is a breaker, right? This is just an uptrend on the 15-minute. You could say, okay, this is your low. There's a break in market structure. There's a higher low into another M15 order block. You pull your fib from here to here. That is right in the sweet spot. So if I pull my fib from here to here, right at the 7.9. That is a super key piece of information around market structure, order flow, and drilling down entries from high time frame to low time frame. And then obviously you can see the result, because you're shorting counter trend here. You get a little bit of a dump, right? And then it pulls back, a little bit of a dump. But the trade you want to be in is this one, because all of this bearishness wiped out in one single upward move. Why? Because the high time frame was bullish. So that low time frame trade you're looking for makes way more sense when you line it up with the high time frame. And you can do this on any time frame, right? Your high time frame could be the 15-minute, your high time frame could be the hourly, whatever. As long as you're going from high time frame to low time frame in terms of how you're actually deciding when to get in the trade and what direction and all that shit, it will increase your expectancy exponentially. Now what happened? What's next? Okay, we broke out of the range, and we are putting in a little bit of a smaller range here on the H4, but at the end of the day, the H12 made a higher high. And on the H4 here, we have an SR flip of the range high and a swing failure pattern right there, right? So to me, this is bullish. Assuming this makes another high, like, we're gonna push to 50K unless something crazy happens, right? Because we had this SFP here, then we had an SFP here. What SFP do I wanna pay attention to? This one. Why? Because we are in a bullish range. Remember what I talked about, right? In a bullish range, a bearish SFP only holds so much weight, but a bullish SFP is going to give you the reaction you want. Same concept of what I just explained there, right? If you want to be in line with the order flow, right? If you're looking for bearish swing failure patterns in a bull trend, they might work a few times, they might work a little bit, but for the most part, they're not going to give you the reaction you want. Okay, so that's Bitcoin hindsight analysis. We just basically explained how all of this shit is going to play out, and what we can kind of expect in terms of looking for the next kind of setup, right? That's a trading system that I just showed you there. And then we'll get on to Ethereum. So Ethereum, very similar PA to Bitcoin. However, the main difference here is we didn't get quite as clean of a setup at the lows as we did on Bitcoin. On Ethereum, the range that I was watching was here to here. And then we had a breakdown in the range. So then this kind of became the range I'm watching here to down here. And I actually was looking at shorts up here near the top of this range, but based on this price action that we're seeing right here, I do think it looks pretty likely that we are going to push up. This is a very long lower wick. This did give you a short setup here. Like, you did get a little bit of a dump. Here's your entry, there's your risk, right? And you probably would want to target into here. And it came up short and it's rallying quite hard. So if I had to guess, just based on looking at this 12-hour chart, I'd be very surprised if this doesn't push up. That's a really long wick to the downside that has been bought right back up. You know, you go down to like the H4, we might get a bullish engulfing candle here. I don't know yet. It'll close in about 14 minutes, so we'll wait and see. Technically, the market structure on the H12 is bearish on Ethereum, technically. That's your range high right there. And then this is your range low. So I don't have a setup on Ethereum right now. I mean, you could enter based on this H12 SFP. So if this H12 closes how it is, right, we could then zoom in and look for a setup on either a break up above the breaker that caused the SFP, or some sort of retest of this consolidation here. So if we get some sort of pullback here, I think you could long Ethereum with a stop like that, and then up into here, and then probably compound on a flip of the range high. So that would be something I'd be potentially looking for on Ethereum to get long. And this would be very similar with Bitcoin. We talked about Bitcoin either flipping the range high or giving us a pullback. So that would be consistent with Ethereum here. If Ethereum pulls back to 3140, 3150, we could look for a long with a stop around that 3110 low and, you know, target the range high. I think that could be a potential setup, assuming the H12 closes bullish, which I'm pretty sure it will. Closes is a big swing failure pattern. So that's what I'm watching on Ethereum right now. Is let's see how this H12 closes. Very similar to Bitcoin, Ethereum is currently operating right in a point of origin of the down move, right? This is the point of origin that broke this move down. So naturally, when we come up here, we're going to see some resistance. So we could be building in a bit of a bear div here. I don't really know. I'm not looking at the RSI, but if I had to guess, maybe. But I'm not surprised that we're seeing some resistance here. This is obviously a key level. We ran all of these highs up here, right? And now we're testing this level for the first time. But if I had to guess, gun to my head, I think Ethereum will push higher, similar to Bitcoin, and we will see a pullback to a deeper retracement, which is going to be around here, lining up with this level here. I think this is probably the draw for price on Ethereum, if I had to guess, up here. Now, can we pull back first, right? Can we come and run some of these lows? Can we do all sorts of shit? Absolutely. But I do think we eventually make our way up to 36 to 3,800 on Ethereum and push into that next level on the chart. And if you delete all this shit, you can see that's kind of just this level right here, 37,222. So that I think is the draw on Ethereum. Setup wise, like I discussed, need to see either a pullback into this for a long or some sort of break above the high for a long. And the exact same as Bitcoin, right? If we get some sort of move above these range highs and then a failure back within the range, that would be the only reason I'd be interested in shorting this. But right now, this looks like it's putting in a higher low here and a very shallow pullback, right? So if the pullback is shallow, you're usually going to only get to the 0.382. And you can see that. Look at the accuracy of the 0.382 there. We did tag the 50%, but we're closing above here. So to me, that denotes strength on this move. So maybe we don't get the pullback that I want. Maybe we do. But absolutely, if we get a move above here, I think you could long it. I also think on the daily close, if it closes as a big 12-hour swing failure pattern, you could just long the daily close. You effectively have a big swing failure pattern here on the H12. So if we close like this, you could long the close. Let's assume it closes right here. You could long the close with a stop at the low, right? And then your target is going to be here. 3.3R. I don't think that's a bad trade. I don't hate it. So let's see. But I think Ethereum, I think the draw on Ethereum is higher. I do. I think it's similar to Bitcoin. I think this is just a temporary consolidation that we're seeing here. And I do think that once we break up, assuming that we do, we will push up to this level here. Too early to tell though. need to wait and see a little bit more price action develop. I need to see how the weekly closes, which is in 8 minutes. And then I want to see how the first few hours of the new week, and then obviously subsequently, maybe even Monday's trading to get an idea. Because if we have a quick move up early in the week and then break back below these range highs here, then I would be looking at that as a deviation. And I'd be looking to short with my stop above wherever that deviation goes to. So no trade right now on Ethereum other than a potential H12 SFP, which you could just long on the daily close if you so choose. Let's look real quick at Ethereum BTC here. So Ethereum BTC is kind of just oscillating, right, between these two key levels here from the weekly. What does this tell us, right? Rejection here, support here. So what does this tell us, right? What does this tell us in terms of the chart? If you go watch my first video in the altcoin series, I cover this exact concept, right? Ethereum BTC, the importance of the ratio. So I'm not going to go into super detail about that. I suggest you watch that video, but effectively, what we're seeing here on Ethereum is it's consolidating. This looks like a lower high right now, so it looks like it's going to likely pull back. Maybe it pulls back into here and then goes, or maybe it pulls back deeper, right, and then goes. We don't know yet, right? We're going to wait and we're going to play level to level. That's how we always do it. But this could pull back right into this kind of 4-3 area, which is like a key level of support and resistance, as you can see here, right? So this is a deep pullback that could happen. And then we could rally. Lots of shit can happen, right? Just like here, we had a very deep pullback and then we ripped, right? Very deep pullback and then ripped. Doesn't mean the uptrend is over. It just means that we might pull back a little more before bouncing further. So this does look like on the weekly that we're putting in a swing high here. So you do have to be careful. It doesn't mean that Ethereum USD cannot go up. What I would suspect is if Bitcoin breaks through 50K this week and trends really hard to the upside, this will roll over, which will mean that this will go up. Ethereum USD will go up, but it will go up less than Bitcoin. And that's what this fraction represents, right? The relative strength of Ethereum versus Bitcoin. So if this chart starts moving down, but the price of Bitcoin USD is going up, it likely means that the price of Ethereum USD is also going up, but less. So we'll have to wait and see. This does look a little bit like it wants to roll. One thing I am watching for here is just kind of this 3-day level. We did make a higher high here, right? So we do have a break in market structure here. So what I would be looking for is this area here for Ethereum to catch a bid first. And if it catches a bid here, maybe Bitcoin breaks 50K and then Ethereum starts playing catch up. This down move here, right here, this is where I'd expect it to catch a bid. If it does not catch a bid here, next area I'm looking at is down here. And then next area I'd be looking at is down here. But ultimately, I'm still bullish on this, right? Even if it comes down here, I do think it will make a higher high eventually. That means that if this rolls over like this and Bitcoin is pumping, you're going to want to be longing Bitcoin rather than Ethereum because Ethereum is going to be the laggard. The thing is, and like I have a lot of people and they'll ask me, right? They'll be like, yo, like, why do you share this shit for free? What about alpha erosion? And what about fucking blah, 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 blah? Everything that I just showed you guys there, for the most part, is 95% of what I do to get into trades. And you can build a system off of those few concepts in totality. And there's people who sell thousands and thousands of dollar courses. There's people who sell paid group subscriptions. There's all people who sell telegrams and whatever to teach you shit that I'm giving you for free. The reason I don't really care is because I can show you exactly what I do. I just showed you exactly what I fucking do and why I knew to get bullish down at that level. I can show you that all fucking day, and it doesn't mean that you're gonna be able to do it and make money. I can show you exactly what I could do. I show you exactly how to enter. I show you everything. It doesn't mean you're gonna make any fucking money because what it requires is repetition. Me showing you doesn't mean shit. You got to see it in your own charts. You got to get that kind of muscle memory where you notice the patterns and you get used to it. And then you got to work on the mental edge, right? Once you start seeing the patterns, okay, now it's time to execute. Because when the chart looked like this, no one wanted to long. Everyone thought we were gonna dump, right? And that's why the mental game is just as important. Because when people are fearful, you need to be greedy. When others are greedy, you need to be fearful, right? People are fearful here. we're still bullish. Market structure is still intact. That's when you need to be hunting the longs for reasons X, Y, and Z. I can show you all this shit all day. It won't change the fact that most of you will never actually apply it because most people don't have the drive to put the time in necessary in the charts to figure it out. And that's why most traders fail. I don't think most traders fail because trading is really hard. I think most traders fail because people are lazy and they give up because they don't see those instant results. They're not getting rich quick, so they give up. And to be honest, most people are better off just investing. But if you follow me, it's because you want to learn how to read the charts like I do, and you can do the exact same thing right fucking here. Well, what did I just explain, right? The high time frame takes precedence over the low time frame. You can use the 6 hour. Nothing wrong with this. The 6 hour gave you a swing failure pattern right there. But as long as you're doing top-down analysis, it doesn't matter what time frames you use. You need a high time frame to determine your levels of interest and your bias, and then you use the lower time frames to refine your entries. A lot of these guys on fucking Twitter and shit that you see trading price action, you know, using the sweet spot and using fibs and shit like that. A lot of them are the homies. A lot of these guys were in my Discord years ago, right? And got introduced to this style of trading through me. And then they went on, and I'm not saying I'm responsible for their success by any means, but they learned through me price action. Then they found ICT, one of my main mentors. Now you see it all over Twitter. But I confidently say I'm one of the first people, I think, that was actively posting only price action stuff on Twitter. If you go back to 2017, 2016, 2018, people weren't using order blocks and the OTE and shit like that like I was. Now everyone is doing it. And I think it's because people are learning that this is a really great way to trade because it's super clean. It gives you very nice entries. It's very simple in terms of how to do the TA. The hard part of trading is not marking up the chart. The hard part of trading is the mental game. Execution, psychology, risk management, that stuff is a battle. Doing the TA is not that fucking hard. Do you even day trade anymore or just watch charts and do nothing? I mean, of course I day trade. I take trades all the fucking time. I don't trade nearly with the same frequency that I used to trade with, but I still actively trade pretty much every single day. It doesn't mean I'm in a trade every day, but I might be monitoring trades, waiting for setups to form. I'm more in the camp of less is more. I'm not a scalper who wants to be in the chart fucking, you know, all goddamn day looking for setups on the M1. That's just not me. Mayne, what needs to happen for price action for it to count as a flip of a level? Whatever time frame the level is derived from, I want to see price action on that time frame. Let me know that a flip is occurring. So if it is an H12 level, I want to see high time frame closes, H4, H6, HH, and ultimately an H12 candle close through the level to let me know the level is broken, right? If you have an H12 level right here and a bunch of H1 candles close above it and then it dumps on the H12, this might just be a fucking wick, right? So then it never really broke. So I like to see the price action on the confluent time frame of the level be the one that gives me confirmation. Do you think breaking 50K invalidates the whole move being a big cap bounce? No, I think the invalidation comes up here. I think the invalidation is here. That big fib that I just drew out on the weekly from the low to the high and the 7-9 is up here. That to me is the invalidation that this is a dead cat bounce. And I know people are gonna be like, oh, well, we're already almost 100% off the bottom. It's like, but the thing is you can have 100% moves in a bear market. If you go back to 2017, everyone thought that this was not a dead cat bounce. We got all the way up to the 7.5 and then we dumped, right? And this was like 100% move almost from the low to the high. So it can come way up there and then still reject. All of these pumps did the exact same thing, right? If you go here, everyone thought, okay, that was the bottom. Look at how high we've rallied. We're 100% off the lows, and then it made another dump. It can go higher. To me, the invalidation of the dead cat is way the fuck up here. Get through here, and I think we go absolutely way fucking higher. But until then, this is an area where I'm going to be super defensive if we get up there. Leverage is irrelevant, bro. All that leverage allows you to do is open positions with less margin, right? If you have 10x margin and you have $1,000 on your account, you can open up a $10,000 position with only $1,000 of margin. But that doesn't mean that's a good thing, and that doesn't mean that's something you should do. Some of the best traders I know only trade spot, and some of the other best traders I know never use more than like 3x leverage. Leverage is not meant so you can open larger positions than you should. Leverage is to reduce counterparty risk, meaning if you have 5 Bitcoins, you can leave one Bitcoin on an exchange, put the other 4 in cold storage, and use 5x leverage and still have the buying power of your full stack. doesn't mean you should just be opening fucking, massive positions on 100x. So it's to reduce counterparty risk. You don't have to leave as much money on exchanges and shit like that. The other reason to use leverage would obviously be to be able to more efficiently allocate your capital, because if you only have one Bitcoin and you want to open a one Bitcoin long, that's your entire account if you just, buy spot. But if you use 2x leverage, now you can open, a Bitcoin long and an Ethereum long or something like that. But most of you should not touch leverage. If you are using leverage, I suggest you use very low leverage, but it doesn't actually change anything. All that matters is, where is your stop? How far is your stop from your entry in terms of a percentage? And then using that information, how big is your account? What do you want to risk? 1, 2, 3% of your account. You put all of that information into the calculation that determines your position size. Most exchanges just have a calculator that will do this for you. And you just make sure that if you get stopped out, you're only losing that predetermined amount of risk that you allocated initially. So if you want to risk 2% on a $1,000 account, wherever your stop goes, your position size is going to be calculated in a way where if you get stopped out, you only lose 20 bucks. And leverage is not part of the equation, right? Leverage just determines how much margin you have to put up to open that position. But I don't think most people should be using leverage. Cross or isolated. Cross means it uses your entire account as margin. So if you get liquidated on a position with cross leverage, your entire account gets wiped. Isolated leverage means it's isolated for that position. So the amount of margin that you put up and all that shit that gets calculated, that is what gets liquidated based on that position, not your entire account. Yeah, it is stupid to use leverage if you don't have to, right? Or just use very low leverage. So you're saying use max leverage on swing failures with a tight stop. That's exactly what I'm saying. Just kidding. The neck is still pretty girthy, boys and girls. Someone's hitting on me in the chat and I like it, right? That's how much of a fucking dork I am. There's a little bit of alliteration for you fucking losers. This is what it'd sound like if I saw BitBoy. Except for I'd be doing him a favor, because I'd given him some fucking old school liposuction. I'd be taking my katana and just slicing the rolls off of him, chopping off his fucking love handles and shit. That fat fuck. I'm just kidding. I'm not gonna do anything to BitBoy. Diabetes has that fucking under control. That's so mean. No, I don't have cancer. What the fuck kind of question is that? Do I look like I have cancer? Bro, I'm pretty fucking white. I literally went into the video settings and turned up the saturation so I look less pale. Death by 1,000 cuts, more like death by 1,000 cupcakes, you know what I mean? Stop it, you guys are too much. Probably don't fucking post pictures on your Tinder profile holding up a fish. I don't know what that means, but I accept. What to do after capital liquidation? I don't know, man. Cry? Go eat a fucking cupcake, cry about it. BitBoy is temporarily banned, but he's back on YouTube. He's back! Not for long. I'm gonna come in, I'm gonna give him the fucking people's elbow right on that fucking beanbag of a body of his. Fucking probably bounce off and hit the roof. This guy's wild. Help me get famous, dog. I need to go outside more. I'm not trying to fucking hurt myself. I'm old. The Taliban is short on women's rights. This episode is Ethereum and no chill. I believe the moon is made of cheese. Oh God. What the fuck? Wow. What the fuck? What the fuck? God damn it, motherfucker. Sorry, pardon my French. I'm still in love with you. Don't worry. I'm in love with you too. I imagine you're very rich. Come on, bro. Please let me get famous. And it's just been me verbally assaulting BitBoy because I have fucking OCD and autism. And you sound like a fucking McDonald's meal that was made up by like a stoner. I used to be called the sauce boss because I have very, very special sauce, trading sauce. Why would I tell you that? Are you the fucking IRS? Go fuck yourself. That's such a fucking weird question. But yes, I am. Nice to meet you, ma'am. So unfortunately, I think the neck is largely genetic, guys. I can't be strangled. It's impossible to strangle me. I'm unstrangulable. Unstrangulable. Why aren't any of you chicks DMing me then? What the fuck? Like, are you joking or is that like a serious question? Because I don't even know how to answer that, bro. Probably get banned after this. I like my fucking shit. Very low opacity. I think I just had a stroke. I don't even know what that is. Should I?